Welcome to the 6th of June's live market forecast. So what we're going to be doing is we're going to be breaking down GBP USD and Euro USD. So the way we're going to do it is we're just going to do some top-down analysis. So starting in Euro US dollar, we're going to clear the chart and we're going to head to the daily time frame. So when we're trading our strategy, you only want to see four different types of time frames. You want to see the daily, the 4-hour, the 15-minute, and the 1-minute. So looking at the daily, what can we see? So what we can see is some liquidity wicks over here. Why is that a liquidity wick? Because we've taken out liquidity above these highs. We're in the form of a liquidity sweep. As you can see there, we've also got a nice supply zone here to follow that liquidity zone, which is also a supply zone in itself. And nothing above that really interests me. We are on the daily, so we do not need to be marking up things up here because the chances are that won't get there for about a month. So let's see how we do. So let's head over to the 4-hour now that we've marked our daily. We can also mark up potential buy areas over here and potentially over here, but I'm not really looking at that far down just yet because we are quite bullish. Because looking at the 4-hour on Euro US dollar, what we can see is that we've had this impulsive down move. We've had a bit of a range. We've had a drop to grab the liquidity and the orders below here. And then we've come back up. We've had a bit of a reaction off of this area of supply and we've dropped back down, but it was only short term. And now we're coming back up. We've broken structure over here. So we can mark that up as a break of structure. But in fact, we'd actually mark this area up as a break of structure. And then this would be another high broken. So potentially another break of structure, and that's a major break of structure. And what we can also see is we had a supply zone here. Yes, it worked out over here, but now it's failed. So we can mark that up as a supply failed area. And we are now bullish. So now we can look at this area in particular. So what can we see within this area on the 4-hour time frame? So what we can see is we've had an up move, a break of structure. So a load of people would have thought, okay, this is potentially a good area of supply. So why not take sales from here? Reason being, this was just a liquidity grab. This wasn't a break of structure. It was a liquidity grab to the downside in order to grab those orders there to fuel this market up move, which broke structure. So at this point, we're still very bullish. So it is a break of structure. And then we have this low formed. And because that low has grabbed liquidity and formed a new high, we should not break that low. So we've come up, we've had another break of structure over here, all good. But then all of a sudden, come down, okay, small change of character, not enough to convince me that we're bearish just yet, because again, could have been another liquidity grab to the downside before an up fueled move. However, that has not been the case. It's come up a little bit, probably tested into some orders here and come back down, broken through this leg, but it's also broken through this original liquidity sweep low, which means it's a structural low broken, which now means market momentum has shifted. So that's a break of structure. And coming back up, yes, we can see some sort of change of character over here. We've broken this low. You could argue we're back bullish, but not really, because this was the high that fueled this downwards break of this low, and then this low formed afterwards. So we are still very bearish on Euro US dollar in terms of the 4-hour time frame. Now, what I can see is an imbalance over here. So this is also known as a fair value gap. However, we don't call it that. We just call it imbalance. It's a lot simpler. In terms of economic terms, yes, fair value gap is correct. So we've tested that fair value gap, grabbing the imbalance, and then we've come back down, and I see a fair value gap over here as well. So I could see price potentially reaching there before we see any sort of reaction upwards. So what I can see is that off of this fair value gap, so we've had this fair value gap that's tested and grabbed there, and then we've had this candle form as a bit of a supply. And as you can see, we've tested in by this wick over here. So we've come up, formed supply, tested in by that wick over here. We've come down and we've broken this character, and we're trying to fill that magnet of the market. So that imbalance or fair value gap over there. So I can say that we are in supply. That's what my point of view is. And now we have this long wick formed, which tested into supply. So I'm just going to mark that up as a zone. Now let's shift to the 15-minute. And what we want to be looking for is potential 15-minute order blocks, so supply and demand zones within this wick that tested the higher time frame supply. Okay, now zooming in a bit, what can we see? So we can see a bit of a range. I don't know what was going on with this low volume, and yeah, so like I said, we've tested into this area, formed a bit of change of character. So this is what I can see, a bit of a supply chain over here. So there was a liquidity grab over here in order to fuel this down move over here, which broke structure over here. So that could be a nice area to potentially enter off of. So some people would have got into these sorts of entries, and this high would have been an inducement. And we also have really nice equal lows over here. So we could have potentially targeted those, and the trade would have looked something like this, specifically if we were only trading off of the 15-minute time frame. So it would have been a 4 risk reward, would have passed half the FTMO challenge criteria there. But in terms of chain, so that's a supply chain. Then we've had this sort of area of supply form. However, I haven't really seen it tap into it, and I'm not really sure why, because we did have a fair value gap initially, but it got filled. So maybe that could be the reason why. So in terms of zooming in, what we could potentially argue is that we've had this supply, and this inside bar candle over here, which is in white, has been the one to react off of it. And then I don't know if you'll be able to see, but this final wick of these 3 wicks is higher than these 2 wicks. Therefore, that could have been a potential liquidity grab to fuel this downwards move. So this is what we talk about, fractal nature of the market. So whatever you see on the daily time frame can be seen on the 4-hour in greater detail, which can be seen on the 15-minute in greater detail, which can be seen on the 1-minute in greater detail. So that's the supply zone there. And we've, at this point over here, so if I grab my replay tool, at this point, we can argue that we have a bit of a fair value gap over here, also known as imbalance. And so there's your fair value gap. So I knew price had to come back there. So an easier way of explaining it might just be the fact that I can drop just one time frame. We don't usually trade the 5-minute, but it's better for explanations. And we can also drop once more because it's not too clear. So yeah, if I click on my replay tool and get rid of this, at this point, it'd be clear there's a fair value gap over here. So I knew price was going to come back, but come back where? We don't know. So I had this kind of low to target as my fair value kind of area. So potentially could have been there. So playing it out, as you can see, we've now filled that fair value gap. So we filled it, and then notice how this initial wick broke structure over here, but very, 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 very small. It was a very, very small break of structure. So we can just consider those to be equal lows because you can see it didn't fully break through. This would be the first break of structure, but I prefer body closures. So again, nothing clear. Okay, we've now broken this structure. We're in this wick, and there's a magnet down here at these equal lows. So what I'm going to say is that this is our entry. We've had the supply chain form. Either this could be liquidity or it could be an entry, and our entry could be here. But I'm willing to take the risk, because what I can see is this wick is higher than this non-existent wick here. So it could have been a liquidity grab. So you could have had that, and then that high lines up with this structure, which lines up with all this structure and all this structure. So it could be a good area and a strong area to react off of. So let's drop to our 1 minute and see if we can find something really nice in there. And we can find this order block. So mark it up as supply, yeah. And then we can set our entry potentially from there, which is what we may have done this week, and we may have entered into this trade. So we could put it as a 3 pip stop, and we would just wait for market to kind of play out for a bit and target that low that it forms before it tags in, if it does tag in. Yes, this isn't a backtesting session. However, we do like to really detail our charts properly. So yeah, this is all liquidity playing out. Yes, we have huge moves over here, going to the 15-minute. That could have potentially been our entry, but it seems like we would have just missed it. But again, the play is still valid. We've broken good points of structure. We're forming a nice upward kind of move. So yeah, that could be still a potential trade for this week, and we could target this low over here. So we could be looking at something along the lines of this. It's a nice 16.3 R. But again, something a lot cleaner would potentially form in the market if we were to have a clearer kind of probability. So like I said, this is a bit of a ranging market. It's not the clearest right now. What I would like to see first in order to enter this is I want to see some sort of reaction off this area, then that fail, and then go up to here. But right now there's no obvious trades. So in terms of Euro US dollar, if you really need to take a trade, it would be this trade. Nothing else clear in the market. But my personal preference recently has been pound dollar. Reason being, yes, we've had a few bank holidays, but the overall market moves and the cleanliness and the kind of structure that's formed in pound dollar has been a lot cleaner. So we'll go through what we can see on a top-down analysis scale from there. So looking at our daily time frame, what can we see? Well, we can see we're clearly bearish. Well, we were until this major daily level got broken, causing a break of structure. What can we also say? We could say that this structure is broken, causing some sort of liquidity grab. However, it's too much of a move for it to be a liquidity grab. Liquidity grabs are usually characterized by loads of wicks as well. There's not enough wicks over here. So I'd show you a liquidity grab. That's more of a liquidity kind of grab. We've grabbed liquidity over there, then we moved. So we've had that, don't know what's happened. We've had that break of structure. We've switched, accident. Okay, there we go. We've had that break of structure, and now potential points of entry. So we've clearly had this demand zone form. Nothing's really tested it properly enough. This could also be demand zone over here. We kind of need to see what's in there, but we tend not to mark up our zones on a higher time frame unless it's like a 4-hour chart. So 4 hours is a lot nicer to start marking up your zones. So what can we see for this week? So we can see we've had that clean break of structure, and we could see market keep rising this week. So what tells me that is the fact that we've had sort of this liquidity grab over here, loads of wicks, really nice. So this would be a liquidity grab. And this liquidity grab swept orders. So loads of retail traders would have had sell stops in there. And they've grabbed it and it's now hit stop loss, and now loads of buy orders have gone into the market. So that's gone in and we're going up, we've had a nice little demand chain form over here. So that's demand. And we've been retested by this area, that's demand. Been retested by this area, that's demand. It's all areas of demand. So It's quite clean. That's been tested by this area. Now we have a 4-hour time frame, demand to supply flip, because that was a demand chain, demand, 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 demand. However, now that we've come back to the next demand, we've broken through it, causing our flip. So now we could argue that we're playing in supply. Why? Because we have this candlestick here, this supply, and that's formed this area. Hopefully it's clear enough on the call. Yeah, so that supply formed that supply, and now we've got this area. And what I'm looking at for this week, so we've seen this supply as well, and then now we have this supply. I'm just going to clean this up a bit. Yeah, so that's kind of where I'm looking at. But in order for me to act on any kind of movement here, I'd need to see these lows get taken out. Reason being is because that would act as my break of structure. Now, this is a demand area right here. So if price was to play off of this area of demand and then come back here, we can't say, okay, so we can take sales here because it's a supply zone. No, because it's a weak supply zone, because that supply zone was never the formation of a new low. There was never a drop breaking structure. Remember, the zones are only strong or valid if they formed a new structural low or a structural high. So if a supply zone hasn't formed a new structural low, we cannot consider it to be a potential area. So I need to see that break downwards. All right. And once I've seen that break downwards and that demand failure, I can comfortably say that supply is in control. At this point, we're in a demand zone, so we cannot make any comments about it right now. So suppose we see the break, then we come back up. This is when I'd start to look at the 4-hour and then move to the 15-minute, look at potential areas of entry, and then we see that we have a bit of a range over here. We have this area, which is actually grab liquidity, so that could be a really nice indicator. And we have this really clean inside bar. So what can I do with this inside bar? I could take 50% of it, because we don't want to enter if we're not in our 4-hour zone. And look, that 50% lines up almost very cleanly with the edge of our 4-hour zone. So we don't want to look for any trades that are below that red line, ideally, or even below the zone. So I'm kind of looking at this area as an area to drop timeframes, look at something. And remember, this is on the 15-minute. We've had a 15-minute liquidity sweep, meaning it's a good area of potential entry. So now we can drop down to like the lower timeframes. If you look at the 5-minute, you have a clear order block in there. But again, we tend not to look at the 3 and 5-minute unless we kind of have to, or market structure isn't clean enough. This might be a really good entry here. So I'm going to mark that up as potential supply, but I am also going to drop down to the 1-minute to analyze further. So what I'm seeing is another supply chain. So we've had our liquidity grab over here, and then we have this supply, which is formed over here. And that supply has formed this supply, but that never properly broke structure. So this supply, that's the one that properly broke structure over here, took out these lows. So that's the high. And then we've made this supply move to the right, this supply over here. So it would be amazing to see price come to this zone over here. And that would be a really clean trade, because you'd be looking at entering on the low of the zone. So maybe I'd enter slightly lower. But remember, we want to trade at rounded numbers. The numbers should end at 0 or 5. And then we want to look at stop loss, nice clean stop loss. Now let's look at the 15-minute to see where potential targets could be, because we want to stick with our higher time frame bias. So should we get there, we could potentially be targeting right down So like I said, I do want to see that fail first. Personally, I don't believe it will fail, but again, that's speculation. So this could be a 25R trade if we're targeting this low over here. Yeah, 25.7R, which is amazing. But right now, because we are in that 4-hour kind of demand zone, I do want to be looking for potential buys, because otherwise we have to wait for price to get all the way up here. And what if it doesn't break demand? Then we would have missed out on the demand trade. There's so much that you need to take into consideration. So we marked out this 4-hour demand. Now, dropping down on 15-minute, what can we see? Well, we can see sort of this area of demand that was caused, and we haven't broken that yet because we had that final drop right to the bottom before we pushed up impulsively. So that's been our demand chain. I do ideally want to enter somewhere within here, which is our 15-minute demand. And then, yes, we can drop down to low time frames, look for potential order blocks. Now, what I'm seeing really cleanly over here is this demand and also this demand, because these are our two clear demand zones in the block. So now we can get rid of what we were doing in terms of the 15 minutes. So we can get rid of this zone, I believe, and then go back to the 5-minute, I think it was. Yep. And just zoom in a bit. Oh yeah, it was the wrong zone we deleted. So we'll delete this zone and then we'll mark up this zone and delete this zone. There we go. So there's our two key lower time frame demands. Now let's see within those demands, are there even better entries? So on the 3-minute, not really. And again, 3-minute on this one, not really. 1 minute. So we want to see that clear order block where we've kind of grabbed those lows. So yeah, nothing that catches my eye really. So I think we'll trade it straight off of the 5-minute zone. So this is what I'm looking for in terms of potential entries for this week. And for those of you who are trying to trade out a funded account, well, guess what? I'm going to join you. I obviously trade my personal account, but I will be joining you with a funded FTMO to be precise. So yeah, as you can see recently in the 5-minute, we've come up, we've come to our zone, and we've kind of had a tap into our zone and then move back out once, and then come down again twice. Now, we like to see 3 pushes. So what I could potentially see happening, this supply zone acting as a catalyst for this downwards move to break the structure. And then that will form some other supply zone similar to this. And then I want to see that supply zone fail. And then when that supply zone fails, we're essentially, it will be a supply to demand flip. And then we can enter off of the first demand zone. Alternatively, what we could see is, like, for example, this just pushing through and then coming back. Now, where would we enter? We'd enter off of this demand zone over here. So we look for this sort of entry model over here, and we target, again, going on to 15-minute, we'll target the 15-minute previous body. So probably this area or this area, something along the lines. Ideally, we want to see a 15-minute change of character. So we want to see, before we see this, we want to see price just break these highs and then we see it play out. But we need to be careful, right? It's not a, okay, this is a very clear trade. Yes, it is pretty clear, but we do want to see those confirmations. That's the most important thing. So on the 5-minute, we can just mark up that. And notice, this is what I mean by fractal nature of the market. If I go to the 5-minute and just mark up that wick that broke liquidity, and then drop to the 3-minute, you'll notice that how the bottom of this zone is in line with the body of this supply zone. So it's the fractal nature of the market. That's what I mean by that. So potentially this could be a trade coming up for this week. And again, if we do have that clean 15-minute, so this would be in the short term. So if this comes along, I'd enter it happily, right? If this trade works out, for example, and we continue and we break this zone, and then we come back down into one of these zones, and then we have our same entry model, I will be looking to take similar trades to that, except our target will be right up here where our supply zone was. So it'll be, the target would be probably initially around there. So you could be looking at huge risk to reward trades like 27. You could pass your whole funded challenge of one trade if they play out. But it's all a sake of what does the market want to do, and you have to really follow the market rather than chasing it. Don't chase the market ever. I know possibly if you're doing a funded account, you might be thinking, okay, I need to hit this minimum trading days. Yes, you do. But let's say you want to hit those minimum trading days, just open a very small lot size on a trade and close it straight away. And there you go. You've taken a trade for that day. So you ensure that you trade every day, or minimum 10 days or 5 days, whatever it is that you need to do. So in the meantime, what you should do is just be looking to follow the market, see what the market is telling you. Don't base your market sentiment off of, okay, I feel like the market's going to do this. Ask the market, what are you telling me? And play it out. Look for those confirmations. Remember, we have a trading plan over here, which will be sent out tonight. This trade, if you follow this trading plan, you should be fine. Obviously, this isn't aligned for everyone. You can edit it, make your own version, same thing. And look, we have that fundamental side. We have the just the general well-being side over there. We have the higher time frame and lower time frame bias aligning. We have the supply zone clarity. We have that first confirmation, which is that liquidity grab. Then we've seen a flip, like a supply to demand flip or demand to supply flip, like I was explaining earlier on, I believe. Yeah, if we break that, then we'll have a flip. And then we also have change of character, break of structure, 3 confirmations. And then you have risk to reward. You don't want to be entering if the risk to reward is too low. Like if your stop loss is massive, don't enter the trade, simple as. So like I said, 3 is the minimum risk to reward, and 3 confirmations. You need to always have, you can't just base your whole trading system off of 1 confirmation, because you'll often get that confirmation as a fake out. Those confirmations will just fake you out of the market, make you take trades that weren't even valid because you didn't confirm them to the maximum level possible. Yes, that means that you'll be missing out on a bunch of trades that will probably hit take profit, but it also means you're sifting out those trades that are guaranteed to hit that stop loss. Yes, you might only be taking 1 or 2 trades per week, but the chances of those 1 or 2 trades per week hitting take profit is, I guarantee you, 90% or more higher than just taking every entry with 1 confirmation. Because you have so many barriers that are stopping you from trading, you're only entering the best trades. This is why you need a trading plan. Don't say you have a mental trading plan, because once you get onto those charts and you see an opportunity, your mind's not going to think, stick to my trading plan. It's going to think, oh, this might be an opportunity to make some money. No, that's not what you should be listening to. You should be listening to whatever you've written down. Write down your trading plan. Follow the plan. Trade the plan. Plan the trade. You'll be fine. Risk, always risk 0.5. Stop changing up risk. Don't risk 0.25% here, 0.5% there, 1% there. Why? Because I could risk 0.25 and hit a 10-to-1 risk to reward, make 4% just like that, and then I could take 4 losing trades on 1% risk. And the same way, you just need to make sure that if you're risking different amounts, you are putting yourself in danger, because you don't know which trade is going to hit take profit. You don't know which trade is going to hit stop loss. So what if you risk less on the trades that hit take profit and risk more than on the trades that hit stop loss? Overall, you'll be losing more than you win. Hopefully you see my point on that. Do at least 1 advanced self-review. do your advanced self-reviews. What is an advanced self-review? An advanced self-review is sitting down, monitoring your losses on a spreadsheet, sitting down and looking, okay, I've taken 1, 2, 3, 4, 5 losses in a row. Why have I done that? So go to your after chart, go to your before chart. And this is how I do my advanced self-review. I can tell myself, okay, there was so much liquidity above these lows. There was a fair value gap here. There was strong structure here. There was no clear supply zone. This was a stupid trade. And it was a terrible risk to reward as well, maybe 3 at most. There was no reason for me to enter this trade. And during the live market conditions, you're too in that, okay, I want to make money kind of mode. You're not thinking, okay, I need to trade my plan. So take that into consideration. Spend an hour at least per week looking at advanced self-review when you're just figuring out why you lost trades, and even winning trades. Look at your winning trades. See, was this even a valid setup? Because the chances are you're looking at your advanced self-review thinking, oh, I shouldn't have taken this trade because it was invalid. But then, and that's why it hit stop loss. But then you look at your winning trades and you're thinking, okay, this is also invalid. Why did I take this? If you're only looking at your losing trades and not learning from your winning trades as well, then you're going to be ensuring that you're setting yourself up for a false sense of hope, because you're thinking, okay, or a false sense of success rather, because it's the same thing as cheating in an exam. You cheat in your exam. Yes, you're telling yourself, okay, I'm doing well. You're impressing your teachers. You get to the real exam when you can't cheat, and you find yourself in a terrible situation. You don't know what to write, and you fail in the long run. So in the long run, if you want to be profitable in the long run and not just have these long shot wins, then go for that advanced self-review every single week. Start a trade journal. If you want my template, message me. I'll send you over my template. Start a trade journal. It's the key to success. Trade journal, trade plan. Trade journal, trade plan. Trade journal, trade plan. I cannot stress it enough. If you want to see success in this kind of industry, you need to see that trade journal, you need to see that trade plan, and you need to be following it. You need to be analyzing things based off of a rule-based system, and you need to be learning based off of a system that you've designed to be revisited, such as the spreadsheet I've made. There's so much information here, so ensure you put in all this information, and before-in screenshots are very useful. They're not necessary because you can track back on the charts, but it's a lot longer that way. So, do we have any questions?
Yeah, I do, but I can wait till you finish recording because it's irrelevant to what you've been doing.
Oh no, ask away.
I didn't listen to the first bit of you talking about how you're going to be doing an FTMO challenge with us. Were you talking about the one in August, or are you talking about this week? Or you're going to be trading your funded? You're going to be trading the funding with us?
Oh, I'm just gonna basically. I've had a lot of people messaging me like, "There's no proof you're legit," all that stuff, and I was like, "Okay, past 3 FTMOs, I can do it again." So I'm starting one from Monday. In fact,
so on Monday, did you say? I didn't hear you. Cut out.
Tomorrow.
Oh, okay, cool.
But this isn't for the general public to like, or members to trade alongside us. This is just as me, just for me to kind of prove myself in a way, even though I shouldn't have to. But I will send that out once that's passed, and I'm sure it will be passed. And
and then so with the Discord server, I'm not sure what the service is. Are you going to be doing? Because you told me to wake up at 6 in the morning. Are you going to
so if you just have a look at the server, look at all the channels, you'll basically say we can talk about that part outside of the call. Yeah.
Cool. But they're not. So the signals are still on Telegram. They're not in the Discord.
Yeah, they're still with Market Chest. They're still with Market Chest. Okay, perfect.
Cool.
All right, have a good weekend. I'll see you guys tomorrow at 6 a.m.
Bro, don't forget to try Trade and View on the desktop. It's so much better.
I will do.